Is a squeeze coming to the silver market? If so, will we see it before the end of 2014? These are just two of the questions that I will consider in this podcast. I will also talk about the predictions of Harvey. An introduction to the silver market can be heard in my last video from a month ago, when I recommended that people start watching silver again. At below $20 an ounce, I believe the price was cheap enough, again, to be of serious interest. The normal seasonal pattern suggested a price low in August, with a solid price rise in September. That's what we usually see. Since mid-August, we have seen a drop of about $1. Last Friday on the 12th of September, that is, the silver price closed at $18.62, and during New York trading, it hit a low of $18.45. An even lower price was hit in overnight trading. By comparison, the silver ETF, SLV, closed at $17.89. That's 13 cents above the day's low of $17.76. That's an important number, $17.76, because that's only a penny above the intraday low we saw back at the end of June 2013, which was a multi-year silver low. If bulls are fortunate, we have just seen an important double bottom on Friday in the silver price. But why was silver weak into September? As it happens, we are seeing weakness in nearly all of the commodities markets. Gold also fell. It closed on Friday at $1231.50, only $50 or about 4% higher than the low, the double bottom low, at the end of 2013. Meantime, the CRB itself, that's the Commodity Research Bureau Index, was only 3.5% above the low for the whole of 2013. And many other commodities are now trading below their lowest prices of 2013. For example, corn closed Friday at nearly 17% below the lowest level reached in 2013. And sugar closed on Friday with a new low for 2014 and 13% below the lowest price of all of 2013. Even WTI crude made a new low for the year this past week, just below $91. The big picture, however, is the strength in the US dollar, which made a new high for the year last week. DXY at $84 is up 5% on the year, with all of that gain coming since the end of June. Even so, even if we adjust for the 5% gain in the dollar, many commodity prices still look weak. For example, WTI calculated in euros is now on the bottom of the price channel, and corn, wheat, and sugar prices, if calculated in euros, are at their low of the year. What's going to turn this price slide around? Well, fundamentally, these price drops must be giving some warnings about the state of the global economy. The European Central Bank has just recently eased rates, moving into its own version of QE. With the weak commodity prices of the last several weeks, I will be very surprised if the Fed does any tightening at all. The Fed will not want to risk a collapse when the world and the U.S. both seem to be in the grips of a price deflation. This past week, I re-examined my cyclical price assumptions. Normally, we get an August low in precious metals. This year, it is extended into September. when I look at the price cycle in CRB and other commodities, I think we may be seeing the 6 to 8 month cycle bottoming right now in mid-September. If we see that, then that should bode well for precious metals for the rest of the month and going into October. And even if the price slide in commodities does not reverse soon, then I think we may soon be reading more and more about deflation, and that will put pressure on the Fed to add stimulus and delay any tightening moves. Now there's another factor out there that requires close monitoring. That's the silver market in China. I've been writing about it quite a lot in my daily diary, and this past week it got more attention from a global audience as Greg Hunter interviewed silver analyst Harvey Organ in a hard-hitting discussion wherein Organ made some dire predictions. The podcast itself is entitled, "By December, the whole thing is going to collapse," unquote. Now I've also been watching silver inventories on the Shanghai Gold Exchange, like Harvey Organ. Up until very recently, the SGE price of silver, that's the Shanghai Gold Exchange price, had been trading more or less in line with the COMEX price. In fact, the Shanghai price was a bit cheap. So it made sense for Chinese merchants who need silver to take delivery and run those inventories down. And the Shanghai inventories have now reached a very low level, more than 90% below the peak of 18 months ago. The actual levels are down from about 36 million ounces to under 3 million ounces in the latest statistics. These low levels are simply not sustainable for a viable futures market. And so the market situation, has begun to transform in Shanghai. The SGE silver price has not fallen as much as the COMEX has. The US price, as I said, was down $1 in the last month, but Shanghai has only lost about 50 cents. So now, Shanghai silver is trading at a near record premium to Western silver prices. And this means the Chinese will stop running down their inventories, since they will not want to take delivery of expensive silver when they can get it more cheaply somewhere else. So I expect physical silver to start moving again from west to east. Chinese buying on the COMEX in Western markets should help the silver price to recover from this recent dip. Watch this closely because it could get exciting very soon. Harvey Organ thinks we could see a silver price squeeze. He believes the Chinese now hold most of the COMEX long positions, and they will start taking deliveries when needed, like now. COMEX presently holds an inventory of over 63 million ounces. If 1/4 or 1/3 of that gets transferred to China to meet the needs of Chinese manufacturers, it could shift the physical silver squeeze from Shanghai onto COMEX. And as the market begins to wake up to this possibility, we should see a rapid appreciation in silver prices. And the boring market that we have been seeing could get interesting pretty fast. So watch closely those inventory and delivery figures, both in Shanghai and on the COMEX, and watch for an imminent reversal of the downwards trend in price inflation. Thanks for listening, and don't forget to check out my blog called Gold Edge, and also my diary on green energy investors. It usually has several comments and many interesting charts every day.